Morning, rhinos. What a beautiful day. Okay, so how great is this shirt, first of all? So us that have been part of Rhino for quite some time, or at least recognize the emblem, right? Recognize the seal. And for those that don't know, we do have a Rhino Charity, which we have given, I believe, $1,800 so far this year, $800 in January, $1,000 in February. We're going to be doing more in March. We're going to be doing more, no, $800 in December, $1,000 in January. We're looking to do more in February, more. We're going to share all of that tomorrow, because I think tomorrow I'm going to do a presentation on Rhino, right? So today's our last day together. Well, this is our last week together for Rhino Wealth. This will be our last day together for Rhino Wealth, right? Tomorrow we will obviously touch upon everything. We're not going to leave you hanging. We'll have a commentary on the markets. And of course, Rhino Wealth is live every single Monday, not 5 days a week any longer, but every Monday, 10 to 11 a.m. So you're never going to be left by yourself. That being said, you will receive an email every single morning that has all of the latest research. And for those that have been part of this program for quite some time, you do understand the value of 16 red and green, right? 20 red and green. We know what those mean. I will share with you what those mean because we did put together a new list today. So we'll have some market commentary. We'll go through some red and greens. But I do want to let you know tomorrow I will do a presentation on Rhino. Who is Rhino? Why is Rhino doing this amazing outreach for Rhino Wealth, right? It is important. And it's important very much to me. It's very important to the 771 members of Rhino, which were zero 12 weeks ago. That has organically grown, zero marketing, all word of mouth. So we are doing something right? Okay. Anyways. So let's take a look at who's here. We see a couple of new names. We see a lot of our favorites, and that's really great. So let's get into the markets, right? I'm going to need, this is water, but if it was vodka, that'd be okay too. Okay, cool. So we do have a really great indicator today. I'll tell you what it is. It's the Anthony wants to throw his computer out a window indicator. Okay. So those that are new, you do not, you may not be familiar with that indicator, and you may think, wow, I just joined into this program and the gentleman behind is already talking about throwing his bleeping computer out a window. This doesn't seem like somebody I'd like to follow. Well, that's okay. We're going to share with you why that might be the case. See, in a market, one must identify what is a market, right? Like, let's go to the Socratic method. Before you go ahead and say markets go up on earnings, or this company is going to do well, or Russia is going to invade you, all of that means nothing. Zero. One big fat zero. What is a market? So Russia and Ukraine, does anyone think Ukraine's going to be able to fight Russia? No, there's zero chance they're going to fight Russia. It's either going to be a surrender or a takeover. It's one of the two. That's it. And all of the noise about it is just noise because it does not affect anyone's life. And if anyone believes Joe Biden is so strong that he's going to tell Putin what to do, you're out of your mind. But then there's the other side that says, all right, well, maybe this is what Joe Biden wants. Everything he's done has been an abject disaster. In fact, his disapproval ratings is 60%, the highest of any president ever in the first year. So maybe war is exactly what he wants. Maybe everyone's saying, please, please, please give us this war because war galvanizes a country together. But are we sending troops there? Are people coming here? No, it's like a social media war. Like, oh, we heard about it on the TV. Russia did this to Ukraine. We're energy independent. It means absolutely nothing to us. So if that's what the Biden administration really sincerely believes, that getting into a war is going to help them, then they're even, and we say the word silly because we don't like using bad words, sillier than we thought they were. Anyways, what's a market? A market is buyers and sellers. Now, people buy for whatever reason, and people sell for whatever reason. If there's a larger number of buyers, the market goes up. If there's a larger number of sellers, the market goes down. That is a market. A stock market is a market of stocks, right? This stock goes up or this stock goes down, depending on if there's more buyers, if there's more sellers. All the stocks work the same way. That's it. So you have to ask yourself, is there more buyers or is there more sellers? Okay, So when you go ahead and take a step back for the markets and say, well, there's been a lot of buyers because the market's gone up. Okay, well, the market goes up 90% of the time. So how many more buyers have there been? Because this market has been up more than 90% of the time since the pandemic. Since March 2020, I think the market's probably been up like 96, 97% of the time. Okay, well, you had people that were stuck home. They couldn't gamble on sports, so they started betting on the markets. Okay, I totally agree with that. But that's not the case anymore, right? So where did they go? Well, were they ever that big to move a market? No. Now, the market went up, and they certainly were able to go ahead and target a particular stock, whether it be GameStop or AMC or BlackBerry. But can they move a market, like a whole market? No. It shows that anyone and everyone was looking to participate. So regardless of when the music stops, while the music's going, you want to be a part of it. There was a party in the stock market. It did not matter the valuation. Everyone wanted to be there because even people who knew nothing about the stock market, that were degenerate gamblers at home, or never gambled on anything, were just simply bored, were in the stock market. Therefore, the stock market was the most crazy great party in all of the world. Okay, cool. That's fine. Well, these people that were home, how are they getting money? They were unemployed, right? Like they didn't have a job. So they were getting enhanced unemployment checks. Great. So they're getting money from the government in an enhanced fashion, so 2 or 3 times normal unemployment, to do what with? Their car didn't need payment, that was pushed off. Their rent didn't need payment, that was pushed off. Their mortgage didn't need payment, that was pushed off. Their phone bill didn't need payment. They were able to push back everything, including student loan bills. So what did they do with the money? Well, they paid off their debt. We saw the debt level in the country go to the lowest it's ever been. We saw the savings rate go to, I think it was like 8, 9. No, actually, I think it was like over 10%. It was the highest it's ever been. What else did they do with the money? Well, they YOLO'd. What's that mean? It's a cool hip term for you only live once, right? So you're going through a pandemic. Oh my God, it's going to kill me. Actually, it's not going to kill me. Oh my God, I can't believe people thought it was going to kill me. Well, I don't think it's going to kill me, but I have all this money and I'm going to milk this. You only live once. I came through a moment where I thought I was going to die. I'm not going to live for tomorrow. I'm going to live for today. YOLO, right? So people would go ahead and buy extravagant stuff, right? Like I'm going to go ahead and buy all of this stock over here and I'm just going to hope it goes up. I'm going to buy all this Bitcoin over there. I'm going to buy all of this whatever, because if it fails, well, then I'm back to where it began. I'm someone who never had this much money to do anything with. Now I have it. I almost died. I only live once. I'm going to live for today. YOLO, right? Okay. So what happened to those people? Well, not very good, right? Because once the market starts coming down, they've never been part of a market that goes down. They don't know what to do. But how much of them was built up in the system? A lot. In fact, there's a lot of money that's in the system that's simply just people who decide to stay home. They have a couple extra bucks here and there, and they've been investing it. But they don't move markets. So what's the thing that moves the market? Well, of the hedge funds, when they go ahead and if money's that free to citizens, well, how free do you think it is to hedge funds and pension funds and asset management funds and mutual funds and private equity funds? Well, it's even cheaper. What do they borrow with, right? Like, well, how do they get money? Well, because of this pandemic, and if we're going to give money, so you see, the government and business is in partnership, right? There is never going to be a situation where the government says we're going to give the people, the deplorables money, and the banks, you don't get it. No, they always get their share. Congress always gets their share. Their salaries went through the roof. The banks get as much money as they want, and the way they do it is through the Fed funds window. The Federal Reserve manages rates. The Fed funds window offers a discount rate to the banks, which is 0%. Now, how much does the Fed have to lend, right? So the banks get to borrow at 0%. That's amazing. How much is there? They better hurry up. Well, the Fed prints money. So they can borrow an infinite amount of money at 0%. Well, that sounds pretty freaking cool. If I was a bank and I know that the biggest party in the world is the stock market and everyone's buying stock and I get to go ahead and borrow this money, leverage this money and everything for 0, why wouldn't I? The music's going. That's where the money is that's in the market, right? So all of that money plows into it and it's great when it's going up. It's going up, right? It goes up, 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 up. And people are like, oh, well, the earnings, the inflation, the this, the that, it all means nothing. It means zero. It just matters the money that's coming into the market. Well, all of that money that went through the bank's hands, they made a mistake. It went through the people's hands too, because this whole Fed funds window thing's been going on forever. The reason it's not claimed as printing new money is because the bank borrows the money, but then they pay the money back. You know how they pay the money back? By borrowing more money. So they're perpetually borrowing, which means they're always borrowing. But if they never pay it back, well, then it's kind of like a shell game, right? Like three shell Monty, whatever it's called. Okay. But the pandemic forced the government to actually have to give the people money and enhanced unemployment, payment protection. And the people always F everything up. They're deplorables. The citizens, they're like little peasants. How dare you? Because once you gave the people money, they started buying stuff with it because that's what people do with money. They didn't get the memo that the banks get. Hey, you better never put this into the real economy because inflation goes up. You better just hold the money and like, let's just play the shell game. You buy our bonds and, debt's fine and no big deal. But the people, you know what they did? They did DoorDash. They did Airbnb. They traveled. They did things people do. So what happens when you have additional money in the economy that's moving around? Well, increased money supply versus goods and services is inflation. The increase in price is the effect of inflation. So we've always had inflation, but now we've had the effect of inflation. Well, that's not good. So also because the pandemic happened, you've had a shutdown of all goods and services, right? How many businesses went out of business? How many businesses cut back? How many businesses couldn't find employees? So you've had less goods and services, more money, therefore you got really bad inflation. It's now like 7%. Well, where's the inflation? Right? Because the banks know how to play this game. They just don't give money to the people. How many times in the last decade since a great financial crisis in 2008 has anyone ever said the banks aren't lending? They don't give you the money because the second they give you the money, the inflation rate goes up and then they can't have the money anymore for themselves. It's a big circle, J-E-R-K, right? That's all it is. So once the money entered the real economy, now the Federal Reserve is like, oh my God, there's inflation, the prices, the companies. We need to go ahead and bring down inflation. We got to tamper down inflation. Well, how does the Federal Reserve do that? They go ahead and raise rates. Right? Because once you raise borrowing costs, less people borrow, and the less amount of people that borrow equals the less amount of money that's in the economy, which means a decrease in money supply against a natural goods and services, right? So if goods and services stay stagnant, stays just consistent, and the money supply goes down, well, now you've had a decrease in inflation. It's called deflation. So if you're up 7% of inflation, and now you had 2 or 3% deflation, now you're at 4%. You brought inflation down. Congratulations, good job. But where is the inflation? It's not in banks. It's in the real economy. The real economy, you think a banker participates in the real economy, they don't do that. We're peasants. They don't do that stuff. Like they have their own economy. Well, let's go back to who's all the people that made all the money in the stock market. Everyone that was sitting home, the real economy made so much money. Everyone that was sitting home just buying stocks left and right, buying Bitcoin left and right, getting their enhanced unemployment checks, having debt down to zero, credit cards up the wazoo. Now we're entering an economy where there's a reopening because the goods and services got cut in half and the whole economy opens up. Now there's demands for labor. In fact, anyone could go get a job at like $20, $22, $23 an hour, right? Okay. So if I made all this money in stocks, if I made all this money in Bitcoin, I could get a job anytime I want for over $20 an hour. I don't really have any debt. I paid down my cards. My savings rate's through the roof. I'm doing pretty good. I feel kind of good. I feel kind of sexy. Now, because I have never had money before, because I did not grow up as an elite member of society, and because I did not know how to handle and finance money, what do I do with it? Well, go take a look at your children. Take a look at anyone you know. Have you ever wondered why people that win the lottery always go bankrupt? Because they never knew how to handle money. They come into like $1 million and they're like, oh my God, all right, 100,000 for you, bought my mom a new house, bought this. Oh wait, taxes? Right? Like that's what it looks like. So these people are all very prone to losing their money very easily. So if the inflation is within those people, well, how does the Fed go ahead and tamper down inflation without destroying the whole economy? Okay, I know what I'm going to do. I'm going to talk about raising rates. I'm going to say I'm going to do it. And the fact that I'm going to raise rates goes ahead and brings the whole market down. Because when you raise rates, the companies that are rate sensitive, that are still borrowing, they see their borrowing costs go up. When you say you're going to raise rates, the borrowing costs of these companies are the go companies, like the companies in the Nasdaq that are still investing in the future, that are super exciting. The AMCs, the GoPros, the whatever the stock, they're the ones that are super excited that they still need to borrow money in the future. The Nikolas, the Teslas, all of the ones that all of the common folk found excitement in and got into. So now what happens when those stocks go down? Well, those people lose money. The stocks go down. That's fine. But what about all those guys, the hedge fund guys, the private equity guys that have been borrowing this money nonstop at 0% at infinite rates, that have been participating in the market and they've been throwing their money in the market because everyone's in the market? Well, they don't buy stock like you and I. Like you and I buy a share of Tesla, right? I have a share of Tesla and maybe I put it on margin, right? So I have 2 shares of Tesla. Oh no, Tesla went down 25%, which means I lost 50% because I borrowed a share, right? And now my margin account says, hey, listen, you no longer have the margin balance. We're going to close it out. And now you have to forcefully sell your 2 shares. They'll sell it for me. And I come into the proceeds and I'm like, oh, darn, that was silly. I was a silly little Billy. Well, take that and multiply it by like infinity. These guys go ahead and borrow money at 0%. They go ahead and get margin at 30 and 40 to 1. Let's say 20 to 1, right? Like Anthony, it's not 2008. Let's say 20 to 1. Well, 20 to 1, what percentage does that stock have to come down for you to go to 0%, for you to lose 100%? 2.5%, right? So if you are leveraged 20 to 1, then 2.5%, right? Yeah, 2.5%, you're going to lose all of your money. Gone. Poof. All gone. So for instance, is that how that works? I think so, right? Yeah. So you put in $1, you have $20 worth of stock. The stock comes down 2.5%. That's okay, good. We got it. That's how that works. So now these large not pension funds, but the hedge funds and the private equity funds and all those funds, when the stock starts going down, what do? Well, it's not going up anymore. They're so margined. Everything's been going up forever. They have to sell. Well, they don't sell like you and I either. They don't sell 2 shares. They sell 500 million shares. They get blown up left and right. So the market has a liquidation. So it goes up on, the market takes the stairs up and the elevator down. So when does that elevator stop? Right? So like, do you know January, the Nasdaq, I think was down 16%, the worst month ever in the Nasdaq's history. Who remembers the tech crash in 2000? It was worse than in that month, right? So the question then becomes, when does that elevator stop? So one could say, well, Anthony, you're missing the point. It's Russia and it's Ukraine and it's the Fed and it's this and this. No, it's not. It's none of that. These guys are getting blown out left and right. You know why it's none of that? Because at the beginning of the day, not the end of the day, when one decides where they're going to put their money, big money managers, billions and trillions of the management, there's only 2 choices. Either you put it in government or you put it in the private sector. If you put it into government, does anyone know a country that exists that's not in debt? Does anyone know a country that has a GDP that's rising? Does anyone know a country that's not dealing with inflation? Does anyone know any country that they have any faith that if they give them money, they're going to get it back and it's going to have the same currency value? There's 0. Let's take America, the biggest and best country in the world. We have 30 trillion worth of debt. Our country's only worth 24 trillion if you liquidated everything. You can make the argument that we're having the best times ever. We're in the biggest boom ever. And we still have as many problems as we have, whether it's political, geopolitical, whatever. Here's the problem. Because that little shell game the banks have been doing, they've been the buyer of the bonds. How does that work? The government comes out and sells a bond because the government wants to borrow money. No one's going to lend the government money because how the hell would you ever lend this government money? They owe more than they have. They have no ability to pay it back. Oh, but they print money, Anthony. Well, that's inflationary. So why would I want to do that? Yeah, that sounds like it makes sense, but you're missing the point. The market is buyers and sellers. They do have a buyer. The buyer's the banks. The banks go ahead and purchase the bonds. In fact, yesterday was a 20-year bond that had the highest percentage of domestic banks purchasing ever. Only the banks are buying the bonds. Where are the banks getting the money from? They're borrowing it from the Federal Reserve. Where's the Federal Reserve getting the money from? They print it. So as long as you have a buyer for these bonds, they hold the value. But the buyer is printed money. So it's not a real buyer. And then if you're going to go ahead and raise rates, well, then the banks can't just borrow that money infinitely anymore, which means that buyer is no longer there for the bonds, or at least it's there less, which means what happens to the bond price? The bond price comes down. What happens when you issue new bonds at a higher yield? The bond price goes down even more, because if I own a bond that yields 1% and now you're issuing a bond that yields 1.25%, what happens to the price of mine? It goes down relative to that one. So if you have 30 trillion worth of bond owners that are only owning bonds because you have a buyer in there that's buying with a funny money, and now that buyer is going to say they're going to stop buying, what's going to happen to the bond price? Not good. Now, here's the thing with bond price. It funds a nation. Therefore, if the bond yield goes too high, this nation can't afford it any longer. Oh, we can just print money. Not at that rate. This nation brings in $3.5 trillion every year in tax receipts. That's 12%, 12.5% on the 10-year bonds. We're at 2%. If all of a sudden you have a mass exodus of the bonds because the value is tanking, and you have a mass increase in rates because they want to deal with inflation, you have a real serious problem where this nation goes bankrupt. Because you cannot, the $30 trillion bond market is bigger than anyone can manipulate. It's too big. Now you could say, Anthony, well, they're manipulating it by buying it. Sure, you can keep people happy while you're making them money. That's easy. Try keeping them happy when you're losing them money. Oh, but everyone owns bonds. China owns bonds. Japan owns bonds. Russia owns bonds. Does that sound like any of those people are our friends? Seriously, read the headlines. They're not our friends. Nobody's going to come. But if those bonds go down, those people, they lose their money too. Have you ever had like a boyfriend or a girlfriend where they just do so much stuff where you're like, you know what? I don't even care. See you later. Sorry that I can't get any of that good loving at night anymore. Or sorry, I can't eat your chicken parm anymore. It's just not worth it. Just leave me alone. Rip off the Band-Aid. Well, that means they're going to go to war. Read the headlines. Kind of seems like they already are, right? The point being, it's all about buys and sells. So do you believe that putting your money in the bond market of the government is a good idea? Probably not. Everything I just described is really, really ugly. And you could say, well, I disagree or I agree, but I don't think you could disagree by much because I didn't offer you anything that wasn't real statistics. You could have a different interpretation, but I'm going to disagree with your interpretation because I believe that money means something. And if you have $30 trillion worth of people that you're going to piss off, I can't go ahead and handicap how that ends up, which means I'm never going to put my money there. Okay, so where are you going to put your money? You put it into corporations. Well, corporations, what's so great about them? They get taxed by government. Yeah, but have you ever seen their balance sheets? Do you know Berkshire Hathaway by Warren Buffett has $150 billion just in cash, just sitting there? Do you know Apple has, I think, 127 billion of cash just sitting there? Do you know Google has, these companies have so much cash. Cisco just reported last night, they have orders that give them vision 30 months from now. If nothing happens with Cisco between now and 30 months, they will still be in business making money because that's how strong their business is. So if Cisco or Apple or Berkshire Hathaway bought an island and said, you know what, we're going to call this island Apple. Well, you would have an island that has a lot of surplus, has money everywhere. How many people own an iPhone? Billions. So you have an island that has billions of loyal people that can't all fit on the island, that would all be rushing to go to the island, that would all be buying real estate from each other and having house prices in the millions just to be on that island. Right? Michael, that's for you. $300 weekly unemployment. Michael, I don't know. Well, that's a really bad deal. In 2020, people were getting $1,200 a week in enhanced unemployment. Maybe you were more of an honest person and you didn't need it and you didn't ask for it. But there are a lot of people that made a lot of money in unemployment. In fact, you might be the only person I know that only got $300 a week for the unemployment. If you're saying it's $300 now, that's a different story. We've always made the argument that the people that were getting that money were never important to the economy anyway. That's not me saying you're not important, but if your unemployment is $300, it's likely that you never, or you weren't making enough that your tax receipts were really affecting the government in any way that was noticeable. And that's not a commentary on you. That's a commentary on society. So please take that the way it's meant for. But that being that, so why wouldn't money flow go into these big companies? Oh, I'll put it into Apple. I'll put it into Google. I'll put it into Berkshire Hathaway. I'll do that way before I put it into the bonds. Okay, cool. So we understand something. We would rather put our money into corporate America or corporations than government. Okay. So let's go back to the beginning of this conversation. It's all buyers and sellers. So if we know that the amount of money in this world is all looking to buy corporates and looking to no longer buy at the rate, or at least a commensurate rate, requisite in subsequent bonds, what does that mean about the stock market? It means, yeah, we're coming down, but where's the floor? Well, why are we coming down? We already expressed it's a liquidation. Companies, these over-leveraged funds have to sell these until they stop going down, which is why you've seen Facebook go down every day. Is Facebook the worst company in the world? You might culturally hate it, but I would actually argue that they're the best company in the world. I would argue that if I had to pick one stock for the next 10 years, it's Facebook. That's my argument. I would buy Facebook for the next 10 years, yet it goes down every single day. Well, Anthony, how can that be? How can, like you might know something about something. How can the stock that you say is the best stock in the world go down every single day? You know what? Because a lot of people agree. Anthony, that makes no sense. A lot of people agree that's the best stock in the whole world. In fact, a lot of people leverage themselves to the moon and back 20, 30, 40 times to go ahead and buy as much Facebook as possible. Well, if that's the case, Ann, it should go up forever. Yeah, it should, until it doesn't. Until those rates start going higher and you can no longer borrow that money at that rate, which means the acceleration of buyers decelerates. And once you get really, really high up here, once you start losing acceleration, what happens? You drop, because it all feeds upon itself. So when Facebook finds a footing, when PayPal finds a footing, these are stocks that tell you, okay, these are the hedge fund favorites. These are the ones that have been liquidated. These are the ones that are representative of what's going on in the market that people are forced to sell whatever they have. Again, mention nothing about Russia, Ukraine, or anything of the sort. What does matter, though, is rates. Because if this whole calculation that we're describing over here in terms of the rate that things come down and when are they going to stop coming down is all dependent on rates, well, if this Federal Reserve thinks they're going to raise rates 7 times and they're going to raise it every single month, we probably have a bit of a problem over here, right? But what happened yesterday? What's been happening? All new rate talk has been met and has been, the response has been a market that has stopped going down. In fact, yesterday you had the Fed minutes come out at 2 o'clock. We sat right here and said, make sure you pay attention. Those are very important. That the market was up Monday, that the market started down Tuesday. A lot of people that were looking for a short position got in, were able to short it. And that if those Fed minutes came out hawkish, right, that they were talking about, oh, we're going to raise rates, and the market goes up on that, you can just buy whatever you want. That's what we said. Now, granted, before I came on, I saw the market was down 400. So I kind of feel a little silly right now. But do I feel silly because I am in it at the moment, right? Because I said that less than 24 hours ago. Yeah, because in a 24-hour period, the only thing that's important is those 24 hours. Let's say next week the market's up, I don't know, 1,000 points. Can we look back and say, Ant, you were right, you missed it by 24 hours, but that was the time to buy. In fact, even though I was down that next day, I'm up way since then. Well, yeah, but that's the benefit of having a vision that goes longer than 24 hours. Because this platform has prided itself on being able to speak to people as things are going on, we don't have that luxury. We just have to go ahead and be in it in the minute. But that's the value of this platform. Everyone has to make decisions in the minute when the facts aren't exactly as they want. It'd be very easy. it'd be very easy for me to have a platform that speaks about the market after it closes every day. I would, honestly, if I was a dishonest person, I could probably make $1 million a month speaking about the market every day at 4 o'clock. It would be so easy because I would already have all the facts of what happened. I could just create a narrative. And I'm actually pretty smart, so I can tell a really good story. But that's never been the value of what we want to do. So it is our belief that the market has found its bottom. Because when we saw the hawkish minutes come out yesterday and the market still responded positively, it had every reason to go down, but it didn't. Coming into today, the market was down 150, the futures I saw this morning. And then you had the weekly jobless claims this morning. They upticked for the first time in 3 weeks. There's 23,000 more unemployment claims than there was last week. Okay. Well, the argument we always made was that the talk of raising rates was going to do the work for them. In fact, the market has already priced in 6 rate hikes. The talk, the threat to, because the market doesn't sit back and say, okay, the day you raise it, we'll do something. No, they go ahead and plan for it. Rates move up, rates move up, rates move up, so that when the thing actually happens, everyone's already planned for it. The Federal Reserve uses that. It's called the bully pulpit. It's their jawboning the market. We're going to do this. We're going to do this. You better be ready. You're going to do this. We're going to do this. And then what do? You sit there like a fool? No, you go get ready for it. And then if it doesn't happen, they got us again. It's like a child crying wolf. I don't care what anybody says. That mother will always run to that child when he cries wolf. Because I live with the mother, right? Like my wife and I have a child. I can tell you that our son can cry wolf till he's, I'm not gonna say the word, but till he's with God in heaven. And my wife will run to him every single time, even if the previous 1,000 times there was no wolf. That's how the Fed works. Because they're able to say anything, everyone will always respond to it. And if they don't do it, it's like, oh, all right, they got me. And then the next time you do the same thing all over again, because they're the Fed Reserve, they print money, they manage the money, they are everything. Now, it is my argument that I believe the Fed is silly enough to go ahead and believe that they're going to be able to raise it one hike and really scare everyone, but keep everyone at bay. Hey guys, I know all 30 trillion of you are going to lose money on this, but we need to do this. We need to raise it just once. We'll do it just once. I swear, I swear, I swear. Don't do anything. Just leave it. We'll buy it back. Just trust us, trust us, trust us. But I don't think you're able to actually go ahead and put a $30 trillion genie back in the bottle. So we'll see what happens. And if they raise rates, we know what we're going to do. We're going to short every emerging market company ever in the history of the world. And we're going to watch the biggest catastrophe in a bankrupt of a country. That's fine. We know the playbook. We will be just fine. But we don't believe that's going to happen. And it's really actually becoming more difficult to share that point of view because I actually don't think they raised it all. And I've been wrong before. And this one seems like there's like a 90% chance that they raised twice, let alone one time, right? So I do think the odds are that they're probably going to raise it once. Like they just have to. They brought you to the party. Like they're in bed with you. They put their protection on. You can't go to sleep now. You better at least, give me a second or two of it and then pretend like you're sick or something. But you need to do something. But I really don't think either way, whatever the case may be, I think it's going to be wildly underwhelming. I think it's going to be a lot less than anyone expected. And I think anyone that's able to, use a calculator can do this math and come up with the same conclusion. Meaning, let's bring back to the market. The market was down 400 earlier today. Now we own Twitter. It's not been fun. In fact, we owned it. So our account started at 20. We brought it up to 27 and a half. Do you know yesterday it got down to 15 at one point? Do you know the day before that it was 25? Like at one point we were down $9,000, $10,000 yesterday alone. Now someone might say, well, man, that's an incredible amount of risk. I don't want to be a part of this. Well, I don't tell anyone what to do. I'm sharing my research with you. For me to go ahead and buy a stock that I believe is going to do well a month from now, well, then it might behoove you to use that as a tool to say, well, if I buy the stock expecting it to do a good a year from now, I'll be right because Anthony's right more times than not. And even if he's wrong, how much wrong is he going to be? And if he holds a stock, I feel confident that given 12 times more time than Anthony has, I could probably perform just as well, right? If I give you a 12 times head start to the finish line, could you get there? So it's not that you're ever competing with me, nor are you ever supposed to copy me. You're supposed to use me as a tool. I like his research. I like the way he thinks. I like his performance. Therefore, if he's doing this, I'm going to do something in the realm of it because I don't want to take the same level of risk. So he's saying this is going to happen in a week. I'll do something that says it's going to happen in 6 months, right? And if Anthony's wrong, well, I still have plenty of time. And if he's right, well, I'm right too, just to a lesser degree. So I can handle and manage the risk. I've been doing this for a long time. My stomach is steel, right? Like, in fact, yesterday when it was down all the way, I put the last 1,000 in. Now, I didn't post it because I was driving, nor did I want to go ahead and bring anyone that deep into the belly pains with me. But I was happy at the end of the day. I was able to put more money into Twitter at 35.60. At the end of the day, it ended at 36.22. I bought the 38s at $1. They went to $1.08. I made 8%, right? But they're still there. So here's the point of the story, right? So when I was driving in this morning and I heard the market was down to 60, I was so mad. Really was so mad. I hit my steering wheel and I said, you know what? I don't give an F anymore. I'm just going to sell everything. I'm going to at least sell the 40s. I got to sell something. I can't just keep sitting here losing money. You know what? I'll make it back with something else. I'm done. I get into my office and I see the market's down 260, 270. I pull up my stock account. I'm like, what was it going to be? 13 today, 14? It was up. Twitter was up. I can't tell you the feeling. It was like, oh. Now, I have looked since, right, before we got on, because I was putting together a new red and green list, a new super duper duper list. And I saw that the market was down 450 and Twitter was down 10 cents. So previously when my account was up, Twitter was up 20 cents. Now it's down 10 cents, which is 30 cents. Twitter's a $35 stock, $36 stock. So it's a % difference. So let's say my account's somewhere in the 18s, right? 18 and a half. Let's just say it's there. And I'm not going to pull up because it's not for your benefits. I don't even want to look at my account because I'm not going to trade anything. I just don't want to see it. Because when you look at your account as often as others do, I forgot who said it, but things are only as important as they seem while you're focusing on them. Nothing's ever as important as it seems as you're focusing on it. So there are people that day trade and they stare at their ticker all day and they see it go up and they see it go down. And something that happened a minute ago is very important to them, but something that happened an hour ago brings back a pain that happened right there. And before you know it, the day's over and nothing happened. They made themselves miserable for a day. Now our options are good for another 29 days. In fact, I said to you yesterday that I'm not touching them at all, actually. I'm going to give them one more week of just not even touching them. Because it is my belief that the market has gotten very close to that bottom. And the fact that the market was down 250 in the morning and Twitter was up is very heartening to me. It makes me feel very good. Now, all the reasons we own Twitter, everyone knows. And those reasons always had a found thesis that because Twitter is buying 15% of their own stock with their own money that's sitting in cash, already approved, that's already been approved to be accelerated, meaning they could do it anytime they want, that how low could the stock actually get? That they have the power to buy 60 million shares accelerated, 120 million shares that they have the wherewithal to do with a stock that trades about 30 to 40 million shares a day. They can literally be the entire trading float for 4 days in a row. And the entire trading float would be one buyer after one buyer after one buyer after one buyer after one buyer. That Twitter outside of cash is worth $21 billion. That Twitter has 215 million monetizable users. That Twitter did $5 billion in revenue last year. That Twitter has a new CEO. That Twitter has plans or has a forecast of 315 million monetizable users by Q4 2023. That when you do the math, and let me break it down so that everyone understands, that for every monetizable user that Twitter has today, which is somebody that has paid for something on Twitter before, monetizable, right? You could get money from them, or has paid for something somewhere before and is active on Twitter, so they're monetizable, it is worth $100. That if you buy Twitter's entire company, it will cost you $100 per person. And if I said to you right now, hey, listen, I got this guy, he likes you, he's always on your platform, he always goes to your store. In fact, he's bought something from you. I'll give you his data, you'll have his email address, you'll have everything that he ever purchased. You'll have when he comes online, you'll have all the things he liked, you'll have all of his friends, you'll have his entire history for $100. I think you'd say yes. In fact, I think a lot of people would say yes, which begs the question, well, just because I can't sell you one, but I can sell you 215 million of that person, would you do it? Well, then I don't have 20 billion. Well, duh. Who does have 20 billion? Right now, corporate balance sheets have the highest amount of money in cash that they've ever had in the history of corporate America. So if we agree that the money flow is going to go to corporates, to go to companies rather than bonds, does that mean corporations do the same? Yeah. Cisco just announced a $15 billion stock buyback. Amazon just announced its first buyback in 10 years. Facebook bought $20 billion worth of stock last quarter. Microsoft bought Activision. Constellation Brands is buying Monster. Twitter is announced a $4 billion stock buyback when the company's only worth $29 billion and they have $7.5 billion sitting in cash. Every company, Walmart just did another stock buyback. Devon Energy is doing a $1 special dividend, meaning for every share of Devon Energy you own, they're going to give you $1 just for owning their stock because they have so much money on their balance sheets that they need to go ahead and give it to the shareholders because they're not going to go ahead and give it to the government. They'd rather give it to their shareholders who then go ahead and buy more of their stock and allow the stock price to go up so that everyone that owns a stock makes money. So why is the market going down? It's liquidation. Margin is a serious thing. Everything is marked to market. You cannot, as a hedge fund, say, yeah, I own Facebook. I know it's underwater, but I believe it's going to go higher, so just let me be. The margin guys come in, the banks that lend you the money and go, no, bro, that's not how this works. We lent you the money. You need to pay it back. We told you if it went under this level, we're selling all of your stuff so we can get our money back because it's our money and not yours. We are not going to trust that you believe this stock's going to go back up later and you'll give us the money later. We don't care. We want it now because we're not going to risk losing all that money to you. So these hedge funds and everything just have to sell everything. So what's a market? Buyers and sellers. When there's more buyers, the market goes up. When there's more sellers, the market goes down. So if we believe this market is wildly viable, that it is absolute, the most pristine sense logic to buy the stock market because there is no other options and because everyone in the stock market is buying stocks. When companies are buying their own stocks, when companies are actually just giving you money to buy their stocks, why wouldn't you? Well, and the market's going down. It scares me. Yes, it should scare you. Only if you don't know why it's going down. Now, of course, these stock gods didn't come to me and say, hey, Ant, listen, the stock market's going down for this reason. I'm able to go ahead and deduce why I believe the reason to be. So I could be completely wrong, right? Like you could be like, well, there's a war about to happen. Well, then I would say to you, what does the war mean to the stock market? What does Russia invading Ukraine have anything to do with Nvidia? What's it have to do with Apple? What's it have to do with McDonald's? Probably nothing. In fact, you can make the argument that people would buy more dollar menu burgers, right? Like I have no idea. But the education level to be successful in the stock market has many, many rings to it. And the person that believes only what they read on TV and is educated to have a thought process, only what the TV tells them, is the least successful person because they do not think for themselves. In fact, you have no Socratic method. If you say to yourself, stock market's going down because Russia's going to invade Ukraine, and this isn't to Frida, I know she posted that. I'm talking about the world, right? This isn't to any one person because this isn't even what she said. She was just giving us a headline, right? She didn't say the market's going down because of this. If you believe that the market is going down because Russia's going to invade Ukraine, fine. I'm not arguing with you. My next question is, explain to me how that happening brings down a stock market. And then you would probably say, well, it makes people very uncertain. Okay, uncertain of what? Well, if Russia invades Ukraine and then the US and Europe go ahead and push back and they have nukes, this could be a nuclear war. Well, that's really bad. The stock market would go down in that case. But is that a rational explanation? Is that even close to being rational? That the world would devolve into nuclear holocaust because that country invaded a small little country that it used to own 40 years ago? In fact, the world would tell you something very different. The world would say when Hitler was invading Czechoslovakia, that Churchill went to Czechoslovakia and said, hey guys, listen, same thing that Stalin did to Finland in 1948. Hey guys, listen, we're coming in, and either you surrender to us and we'll figure it out, or we're just going to take you out. And you have no defense. If anyone believes Ukraine could fight Russia, you're out of your minds. If you believe that everyone in Europe is going to fight for Ukraine and go ahead and live in a cold winter because they have no more gas line from Russia, you're out of your minds. If you think the US has the political support to send troops over to go fight World War III with Russia because they're taking over Ukraine, you're out of your mind. Those things are never going to happen. So what is it that we're scared of, and what is really the worst case scenario? The real worst case scenario is that Ukraine goes ahead and puts up a fight. They don't want to give it up. They make a lot of noise. Europe and America say, you know what, we're putting these sanctions on you. And they could sanction Russia and stuff, right? Russia, do you know the Russian economy is the size of Texas? I mean, they get a lot of press because I guess they're good at marketing. But Russia's the size of Texas in terms of economy. Yeah, they have nukes, but that's the line in the sand. The world doesn't deal with that. The world, if Putin said, hey, you know what, you guys know we have nukes, that's when the world says, whoa, bro, I was eating something, put that down. I don't give a if I have to live in a cold winter. That's a line in the sand. No one is allowed to say that sentence. So Russia would never say that. They would be obliterated. Putin would be out of office. You cannot, it's like saying bomb on an airplane. You can't do it. You just can't do it. But what if I was a bombardier? You'd get taken off the plane, right? So, and let's say, okay, so Russia's going to take over Ukraine and you think something bad's going to happen, right? Well, there's also someone that thinks like me, that thinks that something less bad's going to happen, which means that person goes ahead and buys the companies because your pessimism is priced in the stocks. A lot of people think bad's going to happen, so they sold stocks, but I don't think that much bad's going to happen, so I'm going to buy it for the cheap because they sold it, which means you're always going to find an equilibrium in the market anyway. So for a market to be coming down 16, 17, 18%, are companies 20% less valuable because the prospects of Russia invading Ukraine? No, not in a million years. Are companies 20% less valuable because the Fed's going to raise rates? No. Are companies 20% less valuable because the Fed cut off the lending for people to indiscriminately buy stocks, and now that they leveraged up so high, they have to sell that stock, and that perpetual selling is a constant flow of outflow and sellers that is completely arbitrary, completely mechanic, and even though people want to buy the market, there's more sellers, but once that selling abates, everyone that wants to buy the market is going to be like the reverse of yelling fire in a movie theater. They're all going to run in and say, it's done? Okay, give me. I think yes. That's my opinion. In fact, I coined the phrase yesterday. I didn't coin it, but I said it. And I was like, wow, I kind of like it. I think we're in store for a rip-roaring rally. That's my opinion. So I own Twitter. I was happy to see it wasn't down when the market was down at the open. Nice shirt, right? How cool. I did see it was down when the market was down 450. So for all those that are new to this platform, you know my next sentence, or you don't know my next sentence. Those that are part of this platform do know my next sentence. I have no idea what's going on in the stock market right now. This market could be up. This market could be down 1,000. I could look absolutely foolish right now. I have no clue. We're going to look at it together. Maybe you already saw it, but I'm going to look at it. And maybe my Twitter's to zero. Maybe Twitter went bankrupt. I'll tell you a secret. It's not a secret, but it's every now and then in life, something just makes sense to you. Like when I met my wife, I was like, grabbing that chick, right? Like some things just make sense. I believe Berkshire Hathaway by Warren Buffett, which has 150 billion sitting in cash, is going to buy Twitter. I think Berkshire Hathaway has no social media company on their portfolio. I think they need it. I think Jack Dorsey, who invented Twitter, who is still on the board and still owns plenty of stock, also owns Square. He's big into crypto. I think that allows Warren Buffett to get that exposure. I think Warren Buffett always buys value, and to buy 215 million people that he could sell stuff to for $100 a piece, he has the money to do it. And I think when you get something as the news media, old white men love owning the news media because you can talk about any type of racism you want. The one that I agree with, is there is a systematic racism that is in the older class because they know things the way they know it, right? I don't think it exists as much today. Like you could find your moments, but I don't think it's like systematic. I don't think if you go into the wrong town, those 15-year-olds are going to get you, right? I think it's in the older class. And what I mean by that is the older class, whether they know it or not, have grown up knowing what people listen to, right? Like how to corral an audience. So whether they do it for good or for bad, the old white men, the old white billionaires know by owning media, they disseminate their message. So whether it's racist or political or whatever, and I can make the argument for all of that because I think MSNBC is like the most racist organization in the world because they keep telling certain demographics things that are factually not true and they use and abuse them. But when you have someone like Warren Buffett that can own, which we think Twitter is the news media, for $20 billion, because they have $7.5 billion in cash, he could buy the company, get the $7.5 billion in cash that they already have, pay $20 billion for the rest. Obviously, he's going to have to pay more because he can't buy it for the price it's at. He'll have to give a premium. But get all this data, all of these people, I think it's a match made in heaven. And I think old white people love buying media. And I think they're right to do it. Whether their intentions are good or bad, I think that what this pandemic has proved and this political last 10 years has proved is 50% of the nation is brainwashable, right? Like you can tell someone like for instance, the COVID vaccines are the only medical commercials I've ever seen that doesn't have a warning. Every drug commercial is two people holding hands, picnicking somewhere with a person in the background saying, yeah, and the side effects might be like seeing the angel of death, puking green vomit, having baloney grow out your ears. Your toes might end up becoming tasty to little ants. Like there's always side effects. COVID, no side effects. But then you have videos of the FDA chairman saying, yeah, Biden really wants to inoculate everyone and the pharmaceutical companies give us a lot of money and they invested a lot of money in this. So this is what we're doing. And in fact, I'll include the link to that in the email tomorrow. Like this is actually happening. But people don't understand it or they don't believe it or they don't want to believe it. So if you own the news that is disseminated to people, you own at least 50% of those people. So I think Warren Buffett, I just think it makes sense. I just think it does. So anyway, let's go to the tape. So before we go to the tape, we're going to offer a little bit of a commentary of what we think is happening. Because only with an unbiased point of view can we see where we are and make an assessment on what's going to happen. Because if you're just in the middle of somewhere with no map, it doesn't matter where you are. It meant nothing because you didn't know how you got there. The market started down 250, went to 450. Okay. We saw Twitter holding its own. We saw Nvidia falling off a cliff. Okay. I believe that the market is going to rally the rest of the day. I believe either the market's going to recover most of its gains, if not all of them, or recover most of them and be up tomorrow. I believe that down 450 yesterday and down, I guess it was 420, 450 today, the lows of yesterday and today, I believe will prove fairly close to each other. And if that's the case, the next move is that rip-roaring rally. That's what I believe. If I am wrong and the market is down even more than that and is falling apart, then we have to reassess and we have to take a look at the low in January. Remember that day that the market was down 1,100 and recovered up 100? It was like 3 or 4 Mondays ago. We have to see what that number is because whatever that low is, we are going to it. If we go through that number, then there's no more map. Then we could just free fall. I do not think that's going to happen. I think there's too much money coming into the market to allow that. I think there's too much priced in to be scared. I think that as the volatility comes in, the outflow, the perpetual selling that's purely mechanical will decelerate. It is that deceleration that I think will be partnered with an acceleration of purchasing because once that's done, you can get into these stocks and feel quite comfortable. That's my belief. So let's see where the market is because if it's down 1,000 now, I'm going to look real stupid. So let's say. La 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 la. Okay. Market is down 450. Okay. So let's now, like we always do, let's read the market. The Dow Jones is the trophy assets of the country, which means this is always going to be international money flow when sovereign wealth funds from other countries send money to the US to park it. They don't buy Zoom, they don't buy GoPro or DoorDash, they buy Apple, they buy Exxon, those companies. So 1.3% is, that's okay. Now the S&P is 1.33%. The S&P is the professional money manager index because their returns are always measured against that of the S&P. It's called the benchmark. If they do better than the S&P, great. If they do worse than the S&P, not great, right? It's actually down less than the Dow. Well, I know it's only 0.01%, but that would tell you that there's active participation in the market ahead in excess to the safe money. This is where the safe money's coming. This is where the active money's coming. And it's outperforming, which means on the margins, right now, this moment, the market should move up from here, right? Now that doesn't, it's a very minimal number, but whatever. Nasdaq is down 1.6%. Majority of the Nasdaq's in Nvidia. Nvidia is the sixth largest Nasdaq company. Actually, I think it's the sixth largest company in the whole world. So that being down is really dragging this as well. But how far can the Nasdaq continue? We're going to take a look at a chart of it. But this is also the stockbroker index, the go, 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 ba, 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 ba. Now, when we've seen the market down 450 over the last couple of days, what has this number been? And I'm going to say it. Some of you will know it when I say it, understand my point, and some of you know it right now. But this has been 2%, 2.5%, 2.9%. The fact this is only, 30 basis points higher than the Dow and the S&P? This isn't falling off a cliff with any great magnitude. This isn't outpacing. This isn't saying, oh my God, the Dow's down 400 and I don't want to look at the Nasdaq. No, the Nasdaq's actually holding right with this. In fact, all of these are kind of moving in tandem. The Russell 2000 is down 1.78%. That's the one that's getting beat up the most. The Russell 2000 is the 2,000 most economically sensitive stocks to the overall market. They're also the stocks that are small enough that companies would behoove themselves to come in and purchase. This one has been outperforming for weeks now, or at least 2 weeks. Therefore, it being down a little more than these, it happens, right? And that's kind of like a biased point of view, because I guess you could say it's, well, hey, that's down the most. It's really leading down. In fact, if you have a different point of view, you'd be saying it. And I agree with that. I think that's fair. I don't think it's a problem, but I do think you probably could tell a different story. So this is my story. So let's go with it. The VIX is up a little less than 10%, 2670. In fact, what was the most recent high? I believe it got to 29 or 30. So this is a lower high. Still going up, right? We don't know where it's going to stop. But if this doesn't get as high as the 30 mark, am I really that, I don't know. Is it cute that the Dow's at 34,500 exactly? I mean, it looks like people are playing with stuff. Everything's kind of coming back a little bit, right? All right, let's look at the headlines. Walmart says shoppers on alert as grocery bills climb. Okay, thanks, Walmart. Airbus CEO says hydrogen plane is the ultimate solution. Duh. Palantir shares dropped more than 13% after earnings. Okay, I don't think anyone really cares that much. But let's see if there's a headline somewhere. Bill Miller is betting big on rising bond yields just as the Fed set to tighten policy. Now, Bill Miller is a really important person. He actually shorted the tech bubble and shorted the housing market. Like he was like 2 for 2. He's pretty good. I think he's probably the most successful mutual fund manager. When he says he's betting big on rising bond yields, what does that mean? Like, how do you bet big on rising bond yields? I don't know. I would imagine that means he's selling tech and he's buying more maybe banks, right? Because banks do go with bond yields going up. I don't know. I disagree with him, but that's Bill Miller. So Maybe this is what's describing the market activity today when the market's down 500. We need someone to tell us why it's down. Maybe that's their answer. All right, so that's that. Now it's down 430. Okay, so let's go to the tape. Let's go take a look at the QQQs today. Okay. Now yesterday, so 2 days ago, you saw the QQQs, the low of the day was on this line, right? And how do we make this line? We connect the tops of everything. So if we connect these, let's move this to make it absolutely perfect. Okay. So what you'll see is this top, this top, this top, this top. Oh, we broke it, now we're above it. Oh, we broke underneath it, now we're underneath it, right? Oh, we broke above it, now we're above it. Okay. So it held, it's still holding. We're above it, but now we're getting to the lows of the day. This is ugly. Like nobody wants to see the lows of the day. Lows of days are ugly things, right? Okay. Now let's take a look at our math. Price volume, and I know I'm going over today, but it's the second test day, so I'm feeling a little nostalgic. Okay. Well, first of all, let's look at yesterday. Yesterday, the market was sideways, right? That's where it closed, that's where it closed. They're sideways. Okay. The market yesterday was volume higher, right? We can see that this is bigger than that. Let's go ahead and get our volatility. Okay. Yesterday, the market came down in volatility. And in fact, I posted this in Facebook, the RHINO Wealth group, price sideways, volume up, volatility down, can't wait for tomorrow. Couldn't have been more wrong, right? So volume's up, volatility's down, price is sideways. What does that tell us? Right? People are getting less anxious. As they're getting less anxious, the volume is going up, right? More people coming into the market and they're less anxious. They're less volatile. And as they're coming in, they went ahead and bought, right? The market was down almost 400 yesterday and actually recovered all of it. Okay, that's good. So what happened today? Market's down, volatility's up. Look at this volume though. That volume's kind of low. It's been an hour and a half. Do we think this volume is going to supersede that volume? I don't think so. I think that's going to end up being less today. So if I have a price that's down and volume that's down with volatility going up, yeah, people are selling, but there's less people selling. Yeah, they're all anxious, but there's less of them. And if you take a look at the volatility from just 2 days ago, you'll see that even as they're very volatile, it's still less than it was 2 days ago. So they're feeling less volatile than 2 days ago. The volume is going up on days that recover and down on days that are down. I think that at least 2 days in a row, that's a proper footing for a bit of a base. Now, remember that January low, right? Here it is. We've gone up over it. We've come down, but we haven't even got close to that. So it's not fun that it's lower than it was yesterday, but I just don't see it falling off a cliff. I think this is just, the volume's not spiking when the market's going down. The volatility's not spiking higher than it's ever been. You don't have people running from the market. I just don't see it. So yeah, the market's down today, but am I going to sell anything? No, I'd be buying. If I had more money, I'd buy more stuff right now. So this is a super duper list. Now Twitter's on it, even though it doesn't qualify, but it's one that I own, so it qualifies to me. And it's down 8 cents. So can one say Twitter's kind of done going down? Like how much further could it go? You have a market that's down 500 points and Twitter's down 8 cents. Look at the space it's formed. I think that's quite strong. I think Twitter says, hey, bozos, we're not coming onto this line again. In fact, let's move it over here, right? That the low of 35.5, and look, 35.50, 35.52. I don't think we're getting onto that again. I could be wrong. And if it does, it's not going to be pretty. But if I did not own Twitter now, would I buy? Yes. So I do own it. So I'm just not going to touch it. I have 29 days. If this gets to here, my account's worth over $35,000. Over here, it's worth $19,000. Do I think the odds getting here are fairly good? Yeah. So I'll just leave it alone. I don't need to do anything. Right? So let's take a look at the super duper list though and see what we have. So PayPal's at 12. All right, we're not doing this. Not playing. Facebook's at 11. This is nothing. Although look, Lucid. This is a company that does electric cars that does not make a single car. Look at it. It's breaking out of a channel. Do you remember us over here? Yeah, I remember. But look at it. It's really strong, but it's not on a super duper list. IWM. I clicked the button, guys. Come on. Does this look like it's breaking down? Yeah, it's down on the day. But I bet you if I show you something, you'll say, whoa. Judging by that, what's that say? It bounced here. It bounced here. It bounced here. Do you think it bounces here or not? Because if you think the market's going higher from here, this is when you buy. Now, the reason I told you the story about me driving in this morning is that Anthony wants to throw us out a window indicator. When you just want to take your hair out, like, what else could go wrong? Stop. And you just sell. It's representative of a class of people. It's a class of investor that is just fed up with things. They're just like, oh my God, enough's enough. Get me out. Well, when that person's out, when the last man's out, who's left to be out? No one. That means the only people left are people that buy, which means that person always is the bottom of the market. Now, that's not me saying it doesn't break this. Who knows? It's at the lows of the days. Maybe it does. But I saw it go up yesterday and I saw volume go up. I saw it go up the day before, volume went down, but then it went back up. In fact, you could say that this is fairly consistent. I saw it go down the day before and volume went down. I saw it go down the day before and volume went down. I saw it go down the day before and volume went down. So when it's going down, volume's down. When it's going up, volume's coming up. I think that's buyers saying, okay, enough's enough. We're finally outpacing the sellers. Let's go back to the beginning of the conversation. What makes a market? I think very clearly you can see that the buyers are starting to outpace the sellers. So why am I running away? Because of Russia and Ukraine? If I almost want to do something that was very R-rated to what I think about Russia. Okay, so we're going to move this, I guess, up there. Chipotle is no longer on our super duper list, but as you can see, guys, remember this, 19 red and green, boom, right? QQQs, we already did them. XLC, we already did it. These were former on our super duper list. Okay, that's a 10. Pepsi's a 10. Clorox or Colgate's an 11, so we'll move that up. And we're just going to make the list so that it's in order. And as you can see, I just did it today, right? And by doing so, we'll be able to get a good handle. So like this is our list. And when one goes to 13 or 14 or something like that, 16, we want to be there for it. But even that said, the fact that we're putting together a super duper list and seeing numbers like 10, 11, 12, what's that conducive of? That's time to buy, right? Like we're looking for times to buy. Does that mean you would go sell in that moment? I don't think so. We're leaving this because it has the trend change bar. So we'll actually, I will leave it there. 10, this is 11. Okay, so we have our list in order. These two, I'll get rid of the IWM. This is up there because I own it, right? I don't know what this is, but it's 12 running. It's not green, so we wouldn't buy it, but it's a 12. All right, but here's important. We need to see PayPal and Facebook. Facebook, really. We need to see it stop going down. It can't keep going down every day. All right, so let's see what we got, right? Okay, Come on. Okay. So Facebook goes down. Big volume, big volume, big volume, big volume. It goes up on lesser volume. Goes down on same volume. Goes down on lesser volume. Goes up on higher volume. Goes down on higher volume. Now it's down again, but that volume's really minuscule. In fact, if you really wanted to own Facebook, I mean, come on. Is it possible it goes to 205, 200? Sure. But this thing was just 320. It's Facebook. It's 214 now. If you were looking for a stock, like, you know what? I want to buy one, Facebook. In fact, PayPal, I would say the same thing. It looks like it keeps wanting to go down. All right, it's going down on, high volume. Now it's going down on lesser volume. Went down on high volume that day, but now it's going down on lesser volume again. I love PayPal. I hate using it as a customer. But in terms of what its value to other companies are, now, who could see this list, right? Ooh, Twitter's now green. Green, 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 some red, green. Does that look like a market that's down 400, 500? It's not, which means our algorithm is important. It does mean something. If you owned every stock here, you'd be down maybe 1%. Maybe not even. You'd be down like 0.25%, 0.5%. Is that better than this? Where are we right now? We're still down 430. I think so. So we're going to leave it there. I do see I have a chat jump up. Nvidia. Yeah, Nvidia looks ugly, Mike. Is it recovering though? Okay, it's recovering. Got down to 241. So I would say Nvidia is the stock of the day. Watch it. If Nvidia goes positive, whoa, Nelly. Nvidia's numbers were good. It's just a lot of people were looking for something, I guess, like really, really great. Which, by the way, I want to say we didn't buy it, nor do we suggest buying it, right? But you can see it. Look, trend line, stop, bounce, 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 broke it, got over it, broke it, under it. Look at the high of the day, bumped its head on it. If Nvidia recovers like 255-ish, that's really good. So that's our presentation for today. Tomorrow, we will follow up on the commentary. Tomorrow, we will highlight a new stock, one that we will purchase. We're not actually going to. Sorry, because I own Twitter. But if I didn't own Twitter, I will highlight one that I would purchase right there because it is the last week, or it is the last day of RHINO Wealth. Now, of course, we still have Mondays, but in terms of 5 days, and I do want to highlight Rhino tomorrow. So for everyone participating for Rhino tomorrow, I am going to show the charity. So put your charitable hats on. And again, we're not taking money. Well, first of all, we're the manager of it, right? Like it goes to a charity. We'll show you the charity, but you'll get cool shirts, you'll get cool gear, you can buy stickers, whatever. And I also want to tell you a little bit about Rhino. So that's tomorrow. Twitter up 4 cents makes me happy. You know what's actually pissing me off? And I said that if Twitter's up 4 cents on a day down 400, could God give me a day where the market was up 400? Twitter would be at 40 today. But that's my relationship with God. He kind of, like when I look up and say it can't get any worse, he hears a challenge. So I'm like, God, it wasn't a challenge. Please stop. All right. I love you all. Please be on for 2 o'clock with V. I'm going to send out the email for that now. And then I am out of commission the rest of the day. I am sitting here till 8 o'clock, literally just working very creatively. And for anyone that's ever had to just sit there and kind of build something, you understand what I'm saying. So I will take my phone off, my wristwatch, everything. Love y'all. The video will be posted in the chat and everything within a half hour. And I'm going to send the email for the 2 o'clock with V. Please be on. Bye, guys.